What if I told you that every single price chart is telling a story of a brutal battle between two forces, the buyers and the sellers, and today you're going to learn the language to understand that story. We're diving deep into the number one concept in trading, support and resistance. We're not just going to draw lines, we're going to understand why price reacts the way it does, and what it means when you hear terms like breakout, fakeout, or absorption. Let's get into it. Imagine this chart is a battlefield. Support is a price level where buying pressure becomes strong enough to overcome selling pressure. It's a floor. Think of it as a zone where buyers see a great deal and step in aggressively, while sellers start to hold back. Resistance is the opposite. It's a price level where selling pressure overcomes buying pressure. It's a ceiling. Here, buyers get hesitant, and sellers see a great price to take profit. The area in between is where the war rages. Price oscillates between these two zones, and each touch is a signal. Let's look at what those signals mean. When price approaches these key zones, one of four things can happen. Your job is to figure out which one and who is winning the battle. First, the bounce and rejection. This is the standard move. When price bounces at support, it means buyers are in control at that level. They've absorbed all the selling orders. When price gets rejected at resistance, it means sellers are in control. They've overwhelmed all the buying. Second, the breakout or breakdown. This is a decisive victory. A breakout above resistance means buyers are in absolute control. Their pressure is so immense they've shattered the ceiling. The old resistance often becomes new support. A breakdown below support means sellers are in absolute control. They've overwhelmed the floor, often triggering a cascade of selling. Third, the false break or trap. This is the most deceptive move. A false breakout happens when price punches above resistance but then slams back down. This means the buyers got exhausted on their final push. It was a trap, and sellers have now seized control. A false breakdown is the opposite. Price breaks support but immediately reverses back up. This means the sellers were absorbed by larger, smarter buyers. The sellers are exhausted and a reversal is likely. Fourth, consolidation or absorption. This is the calm before the storm. Price moves sideways in a tight range. This is a silent war of absorption where one side is quietly building strength for the next big move. Host, let's see this in action with real Bitcoin charts. Look at this example from April 2024. See how Bitcoin bounced multiple times around this $59K support zone? Each bounce was a clear signal that buyers were in control right there. Now, look at the breakout in March 2024. After struggling below $73K, price finally powered through. This wasn't a small spike, it was a sustained move showing buyers had absolute control. One of my favorites is the false breakup from late 2022. See how price each time? It got rejected right back down after a breakout above 61K. This was the ultimate sign that buyers were exhausted and buyers took control and starting the bear market. So we've learned to read the battle on the chart, but here's the million-dollar question. How can you tell a real breakout from a fake out before the price reverses? How can you see absorption happening in real time instead of just guessing? The answer lies in moving beyond the basic candlestick. The secret weapon of professional traders is the footprint chart. Platforms like Sierra Chart, ATAS, don't just show you where price went, they show you how it got there. A footprint chart shows you the individual buy and sell orders at every price level. This is how you get undeniable proof, identifying a fake out. You see price break a level, but on the footprint you see a massive imbalanced wave of selling orders right at the new high. That's not strength, that's exhaustion. The buyers are gone and smart money is selling into their euphoria. You see the trap as it's being set. Spotting absorption. Price is sitting at a key support level, not moving much. On a normal chart, it looks boring, but on the footprint, you see a different story. Giant buy orders are consistently sitting at the bid, absorbing everything the sellers are throwing at it without letting the price drop. This is the smart money, accumulating before the big move. This is the evolution. You convert your trading from this, reacting to what just happened, to that, anticipating the move based on the hidden order flow. It's the difference between seeing the aftermath of the battle and seeing the general moving the troops on a live map. If you're serious about trading, your next step is to explore these tools. Start with our basic support and resistance, master it, and then graduate to reading the footprint. If you want a deep dive into how to read footprint charts and spot these imbalances, let me know in the comments below. It could be the topic of our next video.